Look, I'm going to be straight with you. While everyone's been distracted by the latest headlines, something fundamental has shifted in the financial system. And if you have money sitting in a traditional IRA right now, you need to understand what's happening before it's too late. The inflation numbers they're feeding us, they're not telling the whole story. Not even close. And the people who understand this, the ones who've been through real economic crises, they're making moves right now. Quiet moves. The kind that don't make headlines until it's already too late for everyone else. Let me show you what I mean. Right now, the official inflation rate sits around 3 to 4%, depending on which month you're looking at. The Federal Reserve tells us they've got it under control. Mission accomplished, right? But here's what they're not telling you. The way they calculate inflation today is completely different from how they measured it in the 1980s. If we use the same methodology from back then, the real inflation rate would be closer to 10 to 12%. Think about that for a second. Your purchasing power is eroding at triple the rate they're admitting to. And your IRA? It's sitting there, fully exposed to this silent wealth transfer. Every single day, the dollars in your retirement account buy less than they did the day before. It's not dramatic. It's not sudden. It's a slow bleed that most people don't notice until they're already in retirement, wondering why their nest egg doesn't go as far as they thought it would. But here's where it gets really interesting. While the average person is watching their retirement savings lose value in real terms, there's a group of institutions that have been accumulating something else. Something that's been a store of value for over 5,000 years. I'm talking about physical gold. Central banks around the world have been buying gold at a pace we haven't seen in decades. In the past 2 years alone, global central bank gold purchases have exceeded 1,000 tons annually. That's not normal. That's not routine portfolio rebalancing. That's preparation. The People's Bank of China has been adding to its gold reserves for 17 consecutive months. Poland just announced they're accelerating their gold acquisition program. Turkey, India, Singapore, they're all doing the same thing. Now ask yourself, why would the world's most sophisticated financial institutions be moving into gold right now? These aren't amateur investors making emotional decisions. These are central banks with teams of economists, access to data we'll never see, and a mandate to protect their nation's wealth. They know something, and they're acting on it. The traditional financial advice you've been hearing for decades, the 60-40 stock bond portfolio, the stay-the-course mentality, it was built for a different world, a world where the dollar was backed by gold, a world where government debt was manageable, a world where central banks weren't creating trillions of dollars out of thin air every time there was a crisis. That world doesn't exist anymore. We're living in an era of unprecedented monetary expansion. The Federal Reserve's balance sheet has exploded from under $1 trillion before the 2008 financial crisis to over $8 trillion at its peak. Even after some reduction, we're still sitting at levels that would have been unthinkable just 15 years ago. And every dollar they create dilutes the value of every dollar you've saved. Your IRA is denominated in those dollars. Every stock, every bond, every mutual fund in your retirement account, it's all priced in a currency that's being systematically devalued, and the pace is accelerating. The government's spending isn't slowing down. The debt isn't getting paid off. The printing presses, digital as they may be, they're still running. Now, I know what some of you are thinking. Stocks are a hedge against inflation, right? Companies raise prices, revenues go up, stock prices follow. That's the theory. But here's the reality. During periods of high inflation, stocks don't always keep pace. Look at the 1970s. The Dow Jones started that decade around 800 and ended at around 800. A full 10 years of going nowhere, while inflation ravaged purchasing power. If you were retired during that period, living off your portfolio, you got destroyed. And bonds? Forget about it. When inflation rises, bond values fall. It's inverse. If you're holding bonds yielding 3% and inflation is running at 8%, you're losing 5% per year in real terms. That's not preservation of wealth. That's guaranteed erosion. So what's the alternative? How do you actually protect your retirement savings from this systematic devaluation? This is where most people get stuck. They know something's wrong. They feel it every time they go to the grocery store, every time they pay their insurance premium, every time they look at their energy bills. But they don't know what to do about it. They feel trapped in the traditional system because that's all they've ever known. But there is a way out, and it's been sitting there, hiding in plain sight for decades. The IRS has a provision that allows you to hold physical precious metals inside your retirement account. It's called a gold IRA, and it's one of the most powerful wealth protection tools available to American savers. Yet most people have never heard of it. Most financial advisors never mention it. Why? Because there's no commission in it for them. They make money when you buy stocks and bonds and mutual funds. They don't make money when you move into physical gold. Quick aside here, if you're sitting on $100,000 or more in retirement accounts, I've put together a comprehensive guide on exactly how gold IRAs work. It's completely free, links in the description below. It covers the mechanics of getting physical gold into your retirement account without triggering tax penalties, which custodians are reputable, what the fee structures look like, all of it. If this is relevant to your situation, it's worth checking out. No obligation, just information you need to make an informed decision. Anyway, back to why this matters right now. Gold has been money for 5,000 years. It survived the fall of empires, the collapse of currencies, wars, depressions, hyperinflations. Every single paper currency ever created has eventually gone to zero. Every single one. The dollar is no exception. It's just a matter of time and degree. And we're seeing the early warning signs right now. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to reduce their dependence on the dollar. They're settling trade in their own currencies. They're building alternative payment systems. They're accumulating gold as a neutral reserve asset. This isn't conspiracy theory. This is documented policy from multiple governments representing nearly half the world's population. When the dollar loses its status as the world's reserve currency, and that process is already underway, the implications for Americans are profound. Everything we import becomes more expensive. The government's ability to finance its debt becomes more difficult. Interest rates have to rise to attract foreign buyers of treasury bonds. And the value of dollar-denominated assets, including your IRA, comes under severe pressure. Gold doesn't have that problem. Gold isn't anyone's liability. It can't be printed. It can't be devalued by government decree. Its supply increases by roughly 1 to 2% per year through mining, which is roughly in line with global population growth. It's the ultimate form of money because it's no one's promise to pay. It just is. And here's what most people don't understand about gold. It's not about gold going up. It's about the dollar going down. Gold doesn't change. An ounce of gold today is the same ounce of gold it was 100 years ago. What changes is how many dollars it takes to buy that ounce. In 1971, when Nixon closed the gold window and ended the dollar's convertibility to gold, an ounce cost $35. Today it's over $2,000. Did gold change? No. The dollar changed. It lost over 98% of its value relative to gold. And that process isn't over. In fact, it's accelerating. The government's fiscal situation is unsustainable. We're adding trillions to the national debt every few years. The interest payments alone are becoming one of the largest line items in the federal budget. There are only 3 ways out of this. Default, which would destroy the dollar's credibility overnight. Austerity, which is political suicide and won't happen. Or inflation, which allows them to pay back debt with devalued currency. Guess which option they're going to choose? They're already choosing it. Every time they run the printing press, every time they expand the money supply, every time they keep interest rates artificially low to make the debt serviceable, they're choosing inflation. And your IRA is on the wrong side of that trade. Now, I want to be clear about something. I'm not saying sell everything and go all in on gold. That's not smart either. What I'm saying is that a properly diversified retirement portfolio in this environment needs to include real assets. Physical assets, things that can't be printed or devalued by central bank policy. Gold is the most liquid, most recognized, most historically proven of those assets. The wealthy have known this for generations. Old money, the kind that's been passed down through families for centuries. It's always included gold. Not as a speculation, not as a trade, as insurance, as the ultimate store of value that preserves purchasing power across generations. They don't care if gold goes up or down in any given year. They care that it's there, outside the financial system, immune to the decisions of politicians and central bankers. And now, for the first time in modern history, average Americans have access to the same tool. You can move a portion of your IRA into physical gold without taking a distribution, without paying taxes, without penalties. It's a direct rollover from your existing retirement account into a self-directed IRA that holds physical precious metals in a secure depository. You maintain all the tax advantages of your retirement account. You just change what the account is holding. Think about what that means. Instead of paper assets that are vulnerable to inflation, market crashes, and currency devaluation, you're holding something real, something tangible, something that's been recognized as valuable by every civilization in human history. And you're doing it inside the tax advantage structure of your retirement account. The timing of this matters. We're at a unique moment in financial history. The old system is breaking down. The new system hasn't been built yet. In that transition, there's going to be winners and losers. The winners will be the people who saw it coming and positioned themselves accordingly. The losers will be the people who kept doing what they've always done, trusting that the system would take care of them. I've studied financial history for decades. I've looked at every major currency crisis, every hyperinflation, every sovereign debt default. And there's a pattern. It always starts the same way. The government spends more than it takes in. It finances the difference by creating new money. Prices start to rise. The government tells everyone it's temporary. They adjust the inflation calculations to make the numbers look better. They blame external factors, greedy corporations, supply chain issues, anything but their own monetary policy. And then, at some point, confidence breaks. People realize the emperor has no clothes. They start moving out of the currency and into real assets. And once that process starts, it accelerates. We saw it in Weimar Germany. We saw it in Zimbabwe. We saw it in Venezuela. We're seeing it right now in Turkey and Argentina. It can happen anywhere. It can happen here. I'm not saying it will happen tomorrow. I'm not predicting some apocalyptic collapse next week. What I'm saying is the conditions are in place. The debt is unsustainable. The spending is out of control. The money printing is ongoing. And the historical precedent is clear. This doesn't end well for people holding paper assets denominated in the currency being devalued. Your IRA is your life's work. It's decades of saving, of discipline, of delayed gratification. You put that money away for your future, for your retirement, for your security. And right now, it's sitting in a system that's working against you. Every policy decision, every spending bill, every round of quantitative easing, it's all eroding the value of what you've saved. You have a choice. You can hope that somehow this time will be different, that the government will suddenly get its fiscal house in order, that inflation will magically disappear, that the dollar will maintain its purchasing power despite all evidence to the contrary. Or you can take action. You can move a portion of your retirement savings into an asset that's protected wealth for 5,000 years. The central banks are making their choice. They're buying gold. The wealthy families are making their choice. They're holding gold. The question is, what choice are you going to make? Are you going to wait until everyone else figures it out and the price has already moved? Or are you going to act now, while you still can, while the window is still open? Because here's the thing about these transitions. They happen slowly, then all at once. For years, everything seems fine. The system keeps chugging along, people keep trusting the currency, and then something breaks. A bank fails, a country defaults, a currency collapses, and suddenly everyone wants out at the same time. And there's not enough gold to go around. The premiums spike, the delivery times extend, the dealers run out of inventory. And if you're trying to get in at that point, you're already too late. We're in the slow phase right now. The smart money is positioning. The central banks are accumulating. The warning signs are there for anyone willing to look. But the general public is still asleep. They're still trusting the system. They're still believing the official inflation numbers. They're still thinking their IRA is safe because it's in a diversified portfolio of stocks and bonds. That diversification is an illusion. When everything is denominated in the same currency, and that currency is being systematically devalued, you're not diversified, you're concentrated, you're all in on the dollar. And that's a bet you don't want to be making right now. Gold is the diversification. It's the asset that moves inversely to the dollar. When confidence in the currency falls, gold rises. When inflation accelerates, gold preserves purchasing power. When the system is in crisis, gold is the safe haven. It's been that way for 5,000 years. It's going to be that way for the next 5,000 years. And the beautiful thing about a gold IRA is you're not giving up the tax advantages of your retirement account. You're not taking a distribution. You're not paying penalties. You're simply changing what your IRA holds. Instead of paper promises, you're holding physical metal. Instead of counterparty risk, you're holding an asset with no counterparty. Instead of trusting the system, you're opting out of the system while still playing by the rules. This isn't radical. This isn't extreme. This is prudent wealth preservation. This is what smart money has been doing for generations, and now you have access to the same tool. The question is whether you're going to use it. I can't make that decision for you. I can only show you what's happening, explain the mechanics, and point out the historical patterns. But the choice is yours. You can keep your IRA exactly as it is and hope for the best. Or you can take a portion, even just 10 or 20%, and move it into physical gold. Create a hedge. Build a foundation. Protect yourself from the monetary madness that's unfolding around us. The information is out there. The mechanism exists. The window is open. What you do with that information is up to you. But I'll tell you this, 10 years from now, you're going to look back at this moment, and you're either going to be grateful you took action, or you're going to wish you had. The people who protected their wealth saw it coming and did something about it. The people who lost their wealth saw it coming and did nothing. Which group do you want to be in? Because the clock is ticking. The debt is growing. The money supply is expanding. The inflation is accelerating. And your IRA is sitting there, fully exposed, losing purchasing power every single day. You've worked too hard and saved too long to let it all slip away because you didn't take action when you had the chance. The shield is available. The protection is real. The mechanism is legal and straightforward. All that's missing is your decision to use it. So take a hard look at your retirement account. Think about what it's really worth in terms of purchasing power, not just nominal dollars. Think about where this is all heading, and then make the choice that's right for you and your family. Because in the end, that's what this is really about. Protecting what you've built, securing your future, making sure that when you retire, your money is actually there, with the purchasing power intact, ready to support the life you've planned for. The time to act is now, not when everyone else figures it out, not when the crisis is obvious. Now, while you still have options, while the system is still functioning, while you can still make the move on your terms. Don't wait until you're forced to act. Don't wait until it's too late. The shield is there. Use it.